This is Market Day Report. We're so glad you're with us this morning, and thank you for allowing us to be a part of your day. How about we jump into the markets? We're up and trading, and let's start with the corn market. You know, that corn market, when we look at where we've been trading now over the last week, it's been in positive territory as we've been up 2% for the week, but we are trading in the red on the old crop. Now, new crop is down 2 at 410 and a quarter. Now let's go to soybeans and the soy trade. Well, you know, it's been up 5% over the past month, but we're in the red right now, trading at 10.45. It's down 2 3/4 cents, and all of our deferred contracts are in the red as well. Now we work to the wheat market, and we'll start with Chicago as we step our way through Chicago and Kansas City. Chicago's up 2 3/4, trading at 509 and a half, and then the Kansas City contract, that's the one that's been under pressure as of late. And then Minneapolis and there it is, Kansas City in the red. And then the Minneapolis trade as well has been lower across the board. Finally, we roll over to cotton. And cotton has been within a really tight trading range, having a hard time breaking through that 68-cent level. In studio, Chris Swift is with Swift Trading. And Chris, let's look at these markets and the feed grain side of it. I know from time to time we'll talk about, the energy side or the biofuel side, but what about the feed grain side? What are feeders watching?
Well, you know, probably the most interesting aspect on it is the carry charge in the corn. With the carry charge in the corn, you're looking at anywhere from 2 to 4 cents a month all the way out to December of next year. And although what we see out there is a huge crop, probably touching pretty close to 16 billion bushels, the price of that crop is still very much fluctuating right now. So when we're looking at that fluctuation, we kind of look and say, well, what if it doesn't go any lower than this? We know we have a huge crop, but that doesn't necessarily mean that the price goes down if we can find that demand for it. And either renewable fuels or in the feedstuffs, as we're talking about, we think that they could continue to at least find a solid floor down here, kind of maybe firm a little bit. So going out forward, watching those carry charge spreads and saying, well, if I needed to own corn a year from now, and looking at maybe with this year's lower prices, we go to planting more beans than corn, and next year it might boost that price up just a little bit, and owning that carry for just 2 to 3 cents out each month out into the future might not be a bad prospect to look at.
All right. Hey, Chris, hang on just a moment. Can't wait to get your thoughts on the cattle market. We'll take a break, be back with more Market Day Report in a moment. This is Market Day Report. How about we go to the livestock markets? You know, this cattle market has really been on a roll and definitely a bull market. How about live cattle futures? Where are we? Well, look at what we're doing on some of these highs here, rolling up to, 241.20 when you roll out to the April contract is the high we've already seen on that one. We go over to the feeder market, and the feeders, you know, we look at some of the highs we've already made here at, 363.10. We're making some good gains in the cattle market. Now over to the hogs, and the hogs are higher across the board as well. Let's bring back in our special guest, Chris Swift with Swift Trading. Chris, it looks like we've shrugged off that New World screwworm news. We traded through the cattle on feed, so where do we go?
Well, it's kind of interesting that you say that, because I'm not real sure, other than we continue to mention rationing. Higher prices tend to ration the beef demand, and we're looking at the consumer out there going, wow, they have really done a great job at being able to pay more and more for that product. And of course, we do understand that at some point in time, that price could ration some of the beef demand from the consumer. But What we're really looking at now is maybe the producer. We could potentially be rationing production capacity out there because we do have fewer and fewer animals. The price continues to go higher, and as much as everyone would like to participate in something like this, the financial capital wherewithal may not allow you to do such. And especially in the South, where we're missing a great deal of the cattle from the Mexican border there, now those doing without have to compete even more heavily for whatever is left in there. And again, that rationing is really starting to impact a lot of producers' decisions going forward as to how much money can I actually put out there when I'm selling a load at X and then going and trying to buy it literally for the exact same price to start all over again.
And I guess quickly, let's talk box beef as well. Is that something to keep an eye on?
Absolutely. Now, 408, I think, was yesterday's close on the boxes there, and anything above 400 is just a phenomenal price. And all fresh beef price increased again, and I think the average price of hamburger meat had increased again. So you're looking at historicals, and probably one of the most interesting historicals is it's the only commodity market at new contract highs, at new historical highs right now, suggesting all other markets are woefully undervalued, or the cattle market might be slightly inflated.
Chris, you know, I'm just thinking here, could the new date night be a hamburger night instead of a steak night? I mean, the direction we're going here with the box beef. Chris Swift is with Swift Trading. Always great to have you along. We'll be here again from the Farm Progress Show in Decatur with more reports all throughout the day. Tammy?
All right, thanks for the update, Tony.